Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day, also known as Fed Day today. Today is September 18th. We happen to have the FOMC big day today with their announcement. So we'll touch on base on that in just a moment. But let's start off with the economic calendar here. I hope you guys like the new slide projections here. I've just kind of been playing around with it and trying to make it a little bit more, appealing to the eye, I guess. So let me know what you think. But we'll start with the first one is housing starts for the month of August. And it's back in July, it was at 1.215 million annualized units for the year. And forecast is supposed to have uptick to 1.26, and it actually came in much higher at 1.364 million. So housing starts have a nice hot start here. Then we also got what we call basically it's the future housing starts when you think about it. It's the building permits. So we had in July at 1.317 million analyzed units. Forecast actually was calling for a little bit a decrease, and it spiked up even further, up to 1.419 million. So great numbers there. We're really liking what we see here, and this kind of capitalizes on what we saw yesterday with the home NHB home builders index yesterday. We saw a spike in their confidence, and that is kind of showing in these housing starts as well as building permits. And that was actually the highest number we've seen this year so far. So good news so far in the housing. We'll look forward to see this continue. Then, of course, later today by 11 o'clock Pacific Standard Time, the Fed will give their announcement. At least that will be released, and then he'll be giving his press conference. Chairman Powell give his press conference about 11:30 Pacific Standard Time. We are expecting a quarter rate hike. Now, the big thing to watch for today in terms for rates and also the in terms of again in terms of the stock market is we're looking for the most thing that's going to affect the rates is the inflation numbers. So we had this oil spike this week because the drone attack on Saudi Arabia, and that was concerning that maybe the decrease in oil and lack of production and the spike in oil prices might increase inflation. And then the CPI number has been pretty high. We saw a spike on that, even though the Fed's favorite gauge is the PCE. So there's a question, are they going to keep more towards looking at the PCE versus the CPI, even though there's a pretty marginal difference on their CPI. I think it's about 2.2, 2.4 versus about 1.8 for the PCE. If there's any talk about inflation and concern about that, bonds, even though there's a rate cut, bonds will not like that, and we'll see a spike in interest rates. So we could see a big spike there. So just be cautious going into today. Um, Again, if depending on what he says, it could also affect the stock market as well. So let's just kind of jump ahead here. Sorry about that. Headline news: stocks are down in head of the Fed announcement. Everything, all ears going to be towards what the Fed says today. They've been kind of watching, of course, the geopolitical in terms of the oil strikes. Saudi Arabia came back and basically said it looks like they're going to be up and running faster than what most people expected. So that was kind of good news to the market. We still got the upcoming meeting between China and U.S. and trade negotiations. That's been the tensions have been down a bit, so that's been easing their concerns. But there's a new thing that just kind of popped up here in the markets. Is the liquidity seems to be an issue in the markets, and short-term rates between the banks. And again, the Fed kind of stepped in yesterday, did what they call a purchase program yesterday, and bought up a bunch of stuff so to try to create more liquidity because the Fed funds rate jumped from where it's supposed to be around two. I think it's like two and an eighth or two and a quarter, an eighth to two and a quarter. It was all up to like 9%. So the banks just didn't want to borrow from one another, and it was creating a lot more of a this is on short-term rates here, or between the banks and their borrowing costs. So let's jump ahead, see how this is playing on the bond market. Bond market is up. We're currently up about 17 basis points. We had a nice little late rally in the day yesterday. We were kind of holding pretty even yesterday, and then we kind of spiked upwards, even though we had started earlier in the day higher. And then on top of that, we got about 17 basis points. So pricing is a little bit better today as a result, especially if compared to yesterday morning, and then coupled with the later day I don't know if you would really want to call it rally, but it did improve a bit. And right now we're approaching the 100-day moving average, or 50-day moving average, excuse me, 150-day moving average, and then we'll have the 25. So we might have it, if we can get things moving along here, hopefully we can get a little bit of a spike upwards and get towards the 25-day moving average here, break above the 50 and start testing the 25-day moving average. And as you can see, that's at 101.56. So it might be a little tough today, but it depends on, again, the market. And right now we've got that trend, which is kind of helping us here, that reversal we had a couple of days ago. And here's yield, same thing. Yields kind of did that trend reversal. It's finding a double floor of support between the Fibonacci level and its 50-day moving average. It's down to about 1.75 right now, which is kind of helping us out a little bit with the mortgage-backed security. So we want to try to see if we can get this pushed down further as well. If you haven't known, I am with a new lender. So if you guys are looking to buy or refinance in California, we just do loans in California. I am a senior mortgage planner with Pinnacle Home Loans. We do offer a wide variety of loan programs and provide you with the best solution for you. If you guys are interested in talking or discussing to see how I can help you out, please either DM me, direct message me, or just send me an email. Those are the best ways to reach me and and reach me. So I look forward to talking to you guys soon. You guys have a great rest of your day. We'll look forward to see you guys tomorrow. Thanks for watching. Bye-bye.